Hey, if you're an options trader or even a stock trader and you just can't get enough of those consistent wins put together, then you may want to start looking at some technical analysis. Well, what's that? That's just plain old chart reading. It's how we make our trades. We're always looking at the charts, seeing which way the stocks are trending. So if you want some simple chart reading tips, what I'll show you today, then you're going to want to stick around and watch this video. So let's go. Okay, gang, Lee Lowell here from smartoptionseller.com. We're back for another round of, chart reading. So all we do, we look at the charts. It helps us decide when it's time to get in or out of an option trade for us. It's all about the chart reading. That's all we do. So let's just jump right in like we typically do and start looking at some charts. We'll look at some indexes. We'll look at some individual stocks. I'll show you what I'm seeing on my charts, some of the indicators that I use. And we'll just go from there. It's very, very simple. It's really going to help you up your trading game. So what we typically like to do is we always like to focus on the indexes first. That's the S&P 500, the Dow Jones, the NASDAQ. Those three indexes really drive the market. And then the individual stocks that comprise those indexes pretty much follow along. And so typically most stocks won't have daily news affecting the price of the stock. So they're going to follow the indexes most of the time. The biggest thing that a company has is their earnings announcements, which come every 3 months out of the year. And then maybe an announcement here or there in between those 3 months, talking about maybe a new product or an FDA announcement, something else. But otherwise, the indexes is what drives the market, and a lot of the times the individual stocks will follow. So we really like to concentrate on the indexes first. And for me personally, I look at the S&P 500 as the broadest definition of the whole market. And I would like to use the SPY, which is the exchange traded fund for the S&P 500. So let me just go over what you're seeing here on your screen in front of you. This is the charts that I look at. I look at daily charts for the most part, and each one of these lines is 1 day's worth of trading, each one of these vertical lines. And I have 4 indicators. Okay, that's what I have on the charts. I have a 20-day moving average, a 50-day moving average, and a 200-day moving average, all simple moving averages. And those are the lines here. We've got a blue line here, which is the 20-day, red line here, which is the 50-day, and this orange or green line is the 200-day moving average. Okay, very important numbers. A lot of people follow the same indicators. And down here is what's called the RSI indicator. It's a 14-day look back period. You can see right here, this is the setting, 14-day on a closing basis. That's what the C stands for. And it basically tells you when a stock or index is getting either overbought or oversold. And I have the number, this horizontal line here, and this horizontal line here is set at the 80 and 20 levels. The default for that indicator is typically 75 and 25. I widen those out to the 80 and 20. So that gives me an idea when a stock's really getting overbought or really getting oversold. And so we're going to look at a few charts today that have gone to those extremes. And when a stock or index goes to an extreme, you could pretty much be assured that the turn is coming soon. The other thing that we like to do on the charts is look at the trends. Okay, and you can see these blue bars, which are basically forming the channels. Now these are hand drawn. Okay, if you want to draw trend lines, these are called trend lines. What you do is you connect the tops and you connect the bottoms. It's a little bit more art than science. And you can see here we connect some tops and connect some bottoms. So channels are a great way to determine which way a market or stock is trending. The most important thing when you're trading is which way the stock is trending, because a trend in motion tends to stay in that same motion until something comes along and pushes it in the other direction. Now, if you're a follower of the market, 2022 was not a good year for the market. You can see the market was in a downtrend for most of the year. And you draw the channel and it goes up and down within the channel. So if you're playing a certain direction, and let's just say you were bearish in 2022, you would want to sell when the market came to the tops of the channel, and you'd probably want to get out of your trades when the market would come down and bounce off the bottom edge of the channel. Now, back in October of 2022, we started to see a turn in the market. We started to see a turn in the trend. We're now in 2022, the end of 22, and most of 2023, the market has been slowly trending higher. And this is when we drew the new channel. So the trend ended in around October of 22, the downtrend ended, and now started this new uptrend, okay? So basically, the trend is your friend. You'll hear that all the time in the markets. The trend is your friend. Why is that? Because like I said, a stock in a certain trend will stay in that direction until it gets pushed in another direction. And you can use the ups and downs within the channel to help time your trades better. So if you want to be bullish on a stock, you better make sure that the stock is in an uptrend. There's no sense of buying a stock. Let me move this over here. There's no sense of buying a stock when it's in a downtrend, because it's going to keep moving in that downtrend. Even though it has pops, eventually it will start to move down again. Now, with the S&P 500, you can see that it's slowly moving higher, even though it's bouncing within the channel. So what's happened this week? Well, we can see here just this past week, the market had been coming down, and we know interest rates have been going up, which the market does not really like. So the market typically tends to move down when interest rates are rising. Here in the US, the Federal Reserve has been raising interest rates, as we know. And the market doesn't like when interest rates are rising for basically two reasons. Number one, because it costs more to borrow money. And companies that need to borrow money, it's going to affect their bottom line. It's going to affect their overall profits. So people will tend to sell stocks that need to borrow a lot of money. Number two is that when you can get fixed income returns from government bonds, CDs, T-bills, money market funds that are paying all over 5% these days, people are going to pull their money out of risky stocks and put it into guaranteed money like that. So the market will tend to sell off. But in the long run, regardless of what interest rates do, the stock market is made up of companies that keep producing products that people keep buying, and their bottom line continues to go up over time. And that's why the stock market will continue to go up in the long run, regardless of what's happening in the world. Okay? So here this week, the S&P 500 came down, actually got just below the bottom edge of the channel here, and we had the uptrending 200-day moving average lurking down below. Now, the 200-day moving average is a really, really big deal. And typically, it can act as the last line of support for a stock or index that is coming off. So you can see this week, here's the 200-day moving average right here. The S&P 500 on 4 days this week came very close to hitting it, and it bounced each time. So I'm personally bullish. The end of the year, the last quarter of the year, October through December is typically a bullish part of the year. So I like how the market has been holding at the bottom edge of the channel here and bouncing off the 200-day moving average. And you can also see, here's yesterday. This was Friday, October 6th, right here, okay? And the little dash on the right side of the bar here is where the market closed for the day. So you can see right here, let me open this up a little bit more. You can see right here that the market closed. There's a little dash on the right side of the bar, closed back up inside the channel, which is another good sign. Not only did it bounce off the 200-day moving average, but it now moved back inside the channel, which could potentially mean the market is ready to start moving higher again towards the top edge of the channel. So for me, I'm thinking bullish here. So that's the S&P 500. Let's look at the NASDAQ, which we use the triple Qs for us to track the NASDAQ. Same thing. Now, all these lines that you see on the charts here, the channels and the lines here, this support area, these are lines that I've drawn in the past just to see, where we've been, what's happened in the market. You can see if I go back even further, you can see some of these ascending triangles, these congestion patterns here. So we use that to help us gauge what's happening, what kind of patterns are being developed in the market. And we use those patterns, which repeat over and over again. We use those to help us gauge which way the market may be headed. Now you can see here with the NASDAQ, we had drawn this support line right here, which is right around let me move myself here for a second. This line was right around what level is that? right around 355 or so, right there. And we use that level as we draw the line where you can see there's other areas up. First, it was resistance up here, and then it became areas of support. So right around 355 is an area of support. And you can also see the channel that it was in. So like the S&P 500, it fell out of the channel, but it bounced right off this support line that we had drawn earlier. So previous levels of support and resistance act as magnets. Okay, everyone's watching the same level. So it's almost like a self-fulfilling prophecy. The markets will react at these prior levels and either bounce or knock through them. So for now, we had the bounce here off this previous level. Here's the 200-day moving average down below. So really what we want to see is the NASDAQ get back above, here's the 50-day moving average, and here's the 20-day moving average right here. We want to see the market get above those moving averages and back into the channel, and that'll really help us figure out, if there's a lot of bullishness ready to go for the last quarter. All right, so let's take a look at some individual stocks. We typically like to look at the more popular stocks because those are the ones that everyone loves and they get a lot of movement. So let's start with Apple. Now here with Apple, just for those of you that are new, you can see that this W pattern is typically a bullish pattern, but this one played out over a long period of time. Now you can see these channels. Now these are channels that I hand drew over time, and then you can see the resistance line here for a long period of time was holding back Apple. It finally blasted through it in June, has now fallen back. But here's another area of support that we had drawn prior, which was in the low 170s. Here's the 200-day moving average. So a good thing that we're seeing this past week was that the 200-day moving average was acting as support, and Apple did bounce back up above this support line. So once again, we're hoping that we want to see some bullishness towards the end of the year. We have the 50-day moving average lurking up here. It's already moved above the 20-day moving average. So we want to see some more bullish action continue for Apple. Amazon, let's look at Amazon. Amazon also uptrending channel, and you can see how it's just hugging along the bottom edge of the channel here. Right here, this was the end of the week yesterday, Friday, October 6th, closing just on the bottom edge of the channel. So, like I said, these channels and trend lines will act as areas of support and resistance. They'll act like a magnet that will draw the market price to those areas. So we really want to see Amazon get back up into the channel and possibly work its way back up to the higher, the top part of the channel here. Okay. So, and these areas are what you can use as your timing, your higher probability timing plays if you want to get into the actual trade. So if you want to get long Amazon, if Amazon can get back up into the channel next week, then that's a higher probability entry point, knowing that the momentum will probably keep it going. Okay, same thing with, where were we? Let's see if Apple had that as well. So Apple bounced off this prior area of support. So you can use that level. Once you see it bouncing, then you can use that as your higher probability trade to get back in. Did the SPY have that as well? Yes, so the SPY as well. It bounced and it's gotten back into the channel. So that is a more higher probability entry point for those that want to get long. Okay, let's look at, where were we? Let's look at Netflix. Most of these are going to be the NASDAQ, these high interest stocks. Netflix had been coming off, but once again, you can see the 200-day moving average is acting as a huge area of support. And what makes it even better is that the 200-day moving average is upsloping versus downsloping. Okay, that's a big key as well. So it bounced right off the 200-day moving average, and we're hoping that it's going to continue on its way higher. Two big stocks. Nvidia has just been a monster this year. Nvidia had some support probably around the 400 level, has has bounced off that area and starting to move higher. You can see the bar, the little dash on the right side of this bar closed at the high of the day. So that means there was a lot of bullish activity, a lot of bullish momentum in NVIDIA, and probably leads us to believe that bullish momentum is going to keep moving higher for next. It's going to keep the stock moving higher. Let's look at Adobe, another stock. Now, if you want to see the symbols, just look over here in the left-hand corner. This is Adobe, also another monster stock since bottoming last October of 2022 at about $275 a share, has just rallied. Here's a line of support that we drew earlier. I don't know, maybe a couple months ago we drew this line. So the area of support is still holding. It bounced off it here recently and is moving back up. So you want to stick with stocks that are trending in a certain direction. You don't want to bet against the trend. Now, I'm going to use some examples here to tell you, why that is, why you want to stick with the trend. Now, this is Verizon, VZ. I always use Verizon as an example here because this is a stock that has been in a downtrend for a very, very long time, going back to even this is December of 2020, early 2021 at $62 a share, and it's just been going down since. I like Verizon as a company. It's basically the largest cell phone carrier, at least here in the US. And I want to get in on the company. I want to buy in on the stock, but it just keeps moving lower. It just keeps telling me it's not time to buy yet. And you can see that every time you probably would have tried to buy on these lows, a couple days later, it's making a new low, right? So, and you have the 200-day moving average down sloping, which is definitely going to keep it contained. So there's no reason why you should be buying a stock like Verizon. Has just made another new low here, $30 a share it hit. And we haven't seen $30 a share. Actually, I need to go back here. And let me move myself here for a second. The last time it hit $30 a share was way back in 2010, 13 years ago. Okay, it's coming down at the 13-year lows here. So we may be getting into some support here. I'd say between $25 and $30 could be the next area of, if you wanted to take a chance at, bottom fishing, nibbling on the bottom for Verizon, I'd say maybe in the $25 to $30 area, because right at $25 seems to have been long-term support, going all the way back to the mid-1990s. So, I'm going to keep an eye on the $25 to $30 area for Verizon. And, I may start to nibble down there. But on a daily basis, you can see it's just going down, down, down. So there's no reason to be bullish on a stock like this. Okay. Let's see. What other biggies do we have? We have Tesla that we can look at. Tesla is just, like a perma-bull stock. Everybody loves Tesla. I say this every time. I can't, there's really no chart patterns that I could put on Tesla to help decide, which way it's going to go. If I had to, make a new thing here, a new pattern, I'd say we have a congestion pattern going on here. So what this is, what's called a congestion pattern, this triangle pattern where the movements are wide and then it starts to get tighter and tighter and tighter until it eventually is going to blow out to the upside or to the downside. It's just a matter of time before it happens. And since most people are bullish on Tesla, I have to believe that the movement's going to break out to the upside versus the downside. That's what I'm leaning towards. So maybe we'll see another week or so, it'll blow up to the upside and get, back moving higher again. So keep an eye on Tesla. So yesterday was another day where so Friday, October 6th was an opportunity. We had some stocks that really moved lower quickly or early in the day that, if you're nimble, you could have bought some. Let me show you what I mean here. Coca-Cola. Coca-Cola is just an amazing stock, stalwart of a company, name brand, known around the world, had been in this sideways channel for a long time. And then it just got destroyed, just the last 2 weeks or so. just gone vertically downwards, got completely oversold. I mean, immensely oversold on the RSI. So, I started nibbling on some shares of Coca-Cola down here because it was just too ridiculous not to. When you get a blow off move to the downside like this, just a vertical move down, the RSI gets oversold. It's probably time to start, getting in some shares. And that's what I did yesterday. So these are sometimes some patterns you can see where this is just a complete washout. And when you see a vertical move like that, it has to bounce at some point. Same thing with Pepsi. Pepsi had just a great stock too, great dividend paying stock, been in this nice uptrend for such a long time. And then the last 2 weeks has just got blasted to the downside. Vertical move to the downside, oversold on the RSI, have to get long some shares down here just because it's just so oversold. Now, if you want to hold for the long run, which is what I do, get some shares down here and hold because eventually it's going to bounce back higher. Same thing we saw with Walmart yesterday. It just look at this huge move, this one-day move. Walmart's in this nice uptrend. So this is just another way to describe a stock in an uptrend. This is a stock that you would want to be long because it's in an uptrend and it stayed in the uptrend, and you can buy along the bottom edges. When it touches the bottom edge of the channel, that is your higher probability timing pattern to get long. Now, Walmart, yesterday, this is just one day right here. And Walmart hasn't moved that much in one day in a very long time. And it fell through the bottom edge of the channel, 200-day moving average here. But you can see it finished the day back in the channel. So there was a lot of selling in these stocks early in the day. Same thing with Costco. This is Costco, C-O-S-T. Here's the symbol up here in the corner. Just a big down move intraday. Now we can look at the 1-minute chart. The 1-minute chart will show you what happened. So here's the 1-minute chart. Market opened yesterday at, on just under $570 a share, and just dropped all the way down into the 540s. Just massive selling, way oversold on the RSI and the 1-minute chart. And it just didn't make sense not to buy some shares of Costco, because look what happened. Bottomed out around 543, and at the end of the day, got back up to almost 560 and finished the day around 557 and change. So, you can take advantage of just, massive euphoric moves, whether this is on the upside or downside. So Costco, another stock that you can, here's the congestion pattern. Okay. Started wide, gets real tight, and then it blows out in one direction. So this 1-day move on Costco, if you're nimble, you can play these things. Let's see if we got some other stocks here. McDonald's, another stock that's gotten hit. Getting to that oversold on the RSI. See that waterfall, huge drop to the downside. So, if you want to be long on McDonald's, if McDonald's is a stock that you like to hold for the long run, here's a perfect opportunity to nibble on some shares down here. Cheap, or cheaper, I should say. Just, you can see oversold. So there's going to be a bounce at some point. But the big key here is that if you want to help your profitability in the long run, if you're an options trader, you're trying to buy call options or buy call spreads, which are bullish plays, you want to make sure that the stock is first in an uptrend and pulling back from that uptrend and bouncing off the bottom edge of that channel and then resuming its move upwards. That's your timing pattern on when you should be getting into, your bullish trades. Let's see what else. Google. Let's take a look at Google. Also, uptrending stock. Here's the channel. You can see bouncing off the bottom edge of the channel here, fell through it a little bit, and now has resumed its uptrend again. So here's your timing pattern. Wait for the bounce off the bottom edge of the channel and starts to resume its uptrend. That's your timing pattern to get into your trades. Once again, here's Verizon. If you're long, you want to wait for the stock to start making that move upwards. You think you're going to buy here, it's just going to come down, you buy here, it's going to come down, you buy here, and it just keeps going lower. It's just going to frustrate you. You don't want to do that, okay? Now, so what do we do here at the Smart Option Seller? Well, the way that we use these plays is that we like to take bullish plays in the form of selling put options and selling put option credit spreads. That's what we do. So on a stock like, any stock that's uptrending, when we wait for the pullback to the, bottom edge of the channel and wait to see that upwards movement again, then we sell our put options. But we give ourselves a lot of cushion for directional error because we know the market's going to surprise us at times. So we like to sell out of the money put options, out of the money put option credit spreads that gives us that cushion. And we like to sell put options and these spreads on stocks after they've made that massive move down. I'll give you an example. So we sold some put options on, or put option credit spreads on Clorox. This is Clorox, CLX Clorox. Just a massive move down, got oversold. That was our timing play to get into this great stock by selling some put option credit spreads, and it has bounced off the bottom. So that's working out for us. So if you want to learn a little bit more about what put selling is all about, why we love it so much, go to our website, smartoptionseller.com, click on the Put Selling Basics link right here, and you'll come to our page. Here's the ebook, free ebook. Scroll down. You can read some of the testimonials. Put your name and email address in here. We'll send you an email back with a link for the ebook. You don't have to fill this out more than once because this thing's all over our website. And learn about selling put options. That what we like. That is what we do. If you want to learn more about us, here's our services tab right here. We have our newsletters. We have our coaching. We use our calculator. Our probability calculator helps us figure out the chances of the stock moving from point A to point B. It's a great little tool. So also down in the description below this video, I have some resources, some websites that could help you out, some books in there that could help you up your game as well as far as technical analysis goes. Take a look at some of those websites. If you found this video helpful, don't forget to give me a thumbs up, give me a like, leave me a comment on this video, subscribe, hit that red subscribe button, send me an email if you want. I'll always answer your emails. All right, that's it for me. I hope this video has been helpful. Once again, you want to trade with the trend. The trend is your friend. It'll really help your trading results. All right, this is Lee Lowell signing off.